And girls, good afternoon from Germany and good morning to the US East Coast and to the Canadian West Coast. I've seen in the chat John from Vancouver, so welcome here on my live stream today for CPI news. As I said yesterday, no, not yesterday, but the previous live stream, I will not go live every day, but just for the most important economic news. And this week we will have a lot of economic news. So let's not waste our time because we have only 15 minutes until CPI news are out. Okay, let's see this. Today we already had the German CPI, and this one came in as expected negative with a deflation of 0.1%. So the month-over-month number is negative, which is a deflation here, but the yearly number is still high at 6.1% in Germany. For the US, the expectation is set here at 4.1% for the yearly number and 0.2% for the monthly number. And like always, the outcome will be compared with the forecast. And if it is higher than expected, then there will be more fear of a rate hike. The rate hike tomorrow already, because tomorrow is the interest rate decision of the Federal Reserve. So there will be more fear, therefore the prices on the stock market could drop. And if it's lower than expected, then it is good and the prices of the stocks will probably rise. So let's see inflation nowcast here. I have to again all the cars. Okay, verify. So here we see the expectation with some early indicators here from Federal Reserve Cleveland. And there we see for May, we already have the CPI numbers. And we see the monthly number came in at 0.19, so almost 0.2%. And core CPI at 0.45. And we see the expectation is about the same, 0.2, 0.4. Yeah, it could come in a little bit higher at 0.45, so maybe 0.5. This can be interesting here for core CPI. The yearly number is 4.13 and 5.34. And we see the expectation here for the yearly number 0.4 and 5.3. So almost the same like here with Cleveland CPI. But let's see the expectation for the interest rates. So for tomorrow at 8 p.m. my time or at 2 p.m. Eastern, we will get the interest rate decision from the Federal Reserve, and Jerome Powell will hold a press conference half an hour later. And right now the market participants are expecting with 77% no rate hike. So sitting there at 5.25% interest rate level, but with 23% they are expecting another rate hike of 25 basis points up to 5.5%. So there is almost no change, as you can see in the previous week here. But if we look at the probabilities for the next meetings, there we see a little bit more than half of chance here to get another rate hike in July or September. This is what the market is expecting right now. But of course it can change when we see tomorrow Jerome Powell speaking at the press conference and telling us what is the outlook. Because he was telling us the interest rate level will probably stay the same until the end of the year. And this is what the market is currently expecting, despite this small rate hike here in July or maybe September. And yeah, it will be interesting for tomorrow as well, because tomorrow we will get more news with PPI, so more inflation data, again 1 hour before the market opens, and then at 8 p.m. my time or 2 p.m. Eastern, the interest rate decision and the press conference half an hour later. So on Friday this week will also be important, not in terms of economic news, but yeah, of course we will see the CPI news from the Eurozone, but more important will be the triple witching day. Why triple witching? Because all the futures and options will expire on Friday and it is a quarterly expiration, so therefore a lot of options and futures will expire, especially the future I trade like Nasdaq. So I will have to switch on to the next one, which is September, and we will soon have a look at the current price of this future. So let's see our Nasdaq future, and as you can see, we are still uptrending. There was a small false break here to the downside, pushing this parabolic to the upside, but after 3 days we recovered completely, even made higher highs and made new highs today at 14,902 points pre-market. So it is still bullish. We often see this bullishness before the Federal Reserve meeting. And you see we could hold the 9 EMA level here. So the purple line is the 9 EMA level, and we were always above. Just 1 or 2 days in the previous 3 trading weeks we tried to close below, but the 20 EMA level was holding. So it is a pretty bullish trend right now, but we soon will hit the 15,000 level, psychological level here. If we look onto the next expiration, which is September, then we see we already are above the 15,000 level. Why? Because the futures here are in contango, which means that these are trading at higher price levels, because you can trade futures on a margin basis, which means that you only have to put a small amount of money to trade them, and there you get the leverage from. And because of this leverage, because you only need a small amount of money, you will have to pay for it, and you pay for it by paying a higher amount here of points or of money, and therefore futures are trading here in contango because of the high interest rate right now with 5.25%. Therefore we have a bigger difference between the June and the September expiration. Okay, just that to keep this in mind, we will soon switch on to the September expiration when we talk about Nasdaq futures, but for this week still June is the front contract month, expiring on June 16th, so this Friday as well. And therefore we will get a lot of volatility onto this Friday expiration. Why? Because all the people having option positions will have to close out their positions, or they will get assigned the stocks or the underlying futures. So therefore they have to shift to the next expiration month or to the next quarterly expiration if they don't want to get an assignment. And this is important because there's a lot of open interest, so a lot of open positions in the option market, and this can cause a lot of volatility on Friday or the days before Friday, because the market makers which have the opposite position in the options will always have to hedge their positions. So what does this mean, to hedge? When they try to hedge, they have the same position like the other part. So if someone is buying a long call on Nasdaq or a single stock option, so then the market maker, which has the opposite position, is short this option. And for not having the risk if the stock or the index is rising, they have to buy the stock or buy the future of the index. And therefore they are covered, so they are hedged. So they don't risk on an assignment that they will have to deliver the stock or the index, which is at a higher level compared to when they have sold the option. And therefore they hedge by buying the underlying asset when they sell a call. Or the opposite, when they sell a put, then they go into a short position. So for not being at risk if the stock market is dropping. And this causes this big fluctuation and volatility on expiration day, because if there's a lot of closeouts, because all the traders who don't want to be assigned on or don't want to hold on this position until expiration, then the market maker, they also have to close out their hedge position, and this causes this big movement and volatility. And of course everyone wants to see their specific price level, their strike level of the option, so that it gets into the money and that it gets that it has a value at the end when it expires. So therefore the psychological 15,000 point level will be important, not on the future but on the index. But when the future expires, it has the same value as the index, because then it's not a future anymore, but it is a spot market product. Yeah, so it has the same value as the index. So if you look at Nasdaq index or at the Nasdaq future expiring in June, expiring this Friday, then they have almost the same value, just a couple of points more, because on Friday they will have the same value when this future expires. This is important to know, and therefore the psychological 15,000 level will be important for the Federal Reserve meeting tomorrow and as well for Friday. So keep an eye on these psychological levels if you are trading in the next days. Okay, let's see the important levels here for our Nasdaq. So the last high point here was 14,695. So 4,000, let's say 14,700 points. It's easier to keep in mind. Will be an important level. So I have no position in Nasdaq right now, but I will have a look at the outcome of CPI and the movements, and then I can still get into a position when the market is open or right before the market opens. But yeah, my feeling is that we will see more rise here up to the 15,000 level this week during Federal Reserve meeting and until the expiration on Friday. And then next week we can see a big shift because everyone has placed new bets and is in a new expiration, and then it is we often see a shift in direction. So I would wait, as a swing trader, I would wait for the settlement on Friday and then take on new decisions. So previous high point should act as a support level. Next psychological level on the upside is 15,000, and if we go on a 5-minute time frame just to see the levels from pre-market, there we have the high point from today, which is here, 14,902 points, so almost 14,900. So it's pretty easy today with all these round levels. And the low point from tonight during the Asian session here is about 14,580 points. So this is this is the low. Sorry, this is the low point from yesterday. So here from tonight, we have the low point here at 14,807. So let's say 14,800. So we have a 100 points range from high and low from pre-market here. And as soon as we go above, there should be more buying pressure. And if we go below 14,800, there will be more selling pressure. And the next stop at around 14,700 because it was a previous high point on a daily time frame. So let's delete this one. So now we have our 3 lines here, but we see it is still an uptrend. So parabolic changed again to the downside, indicating uptrend. ADX is clearly indicating uptrend and a strong uptrend. So I wouldn't try to short this on as a swing trade right now. I would wait for clear sign of a reversal. So sometimes you see these here, these dojis here. These can be first signs of a downturn. But as you can see here, it was just 1 day of sell-off and then we saw more buyers coming in. We saw another doji here, 2 days of selling and then more buyers stepping in. So it can be dangerous to trying to guess where the high point will be. Always wait for a clear level before you try to enter a big short as a swing trade. If you are a day trader, you have to look on lower time frames like 5 minute, 15 minute or even 1 minute. Okay, let's go to the news. In 2 minutes we will see the outcome of CPI and then we will see market movement. So let's get this window a little bit smaller so that we can see both the market moving on a 1 minute time frame and the outcome of the news. So probably see 50 points to the upside, 50 points to the downside if everything is in line, because there we have the resistance and the support. And if we go to higher or lower levels, then we can also have more buying or more selling pressure. But if I can remember right, the last time we had almost no movement. This was just a 50, 70 points move, and then we went back to the breakout level. So there was almost nothing happening. So it will be interesting how it will be this time. 1 minute left, or 40 seconds left. I'm never trying to guess the outcome, always waiting for the market to find its own direction. We know what should happen if the number is higher or lower than expected, but we are not trying to guess the outcome and trading the outcome. We are just trading direction. Like always, no investment advice, even if I'm taking on any position. I'm not forcing it, but if I see a clear level, then I will open a position. And 1 second left. Here is the news. Markets turning down, and we see in line with core CPI, and CPI is a little bit lower than expected. 4% instead of 4.1%, 0.1% instead of 0.2%. And you see the big shift from selling pressure to buying pressure, because the number is lower than expected. This is what the market wants to see, what the Federal Reserve wants to see. So we probably will see a shift now here from this 77% to more than 80%. Yes, 82% right now for no rate hike tomorrow. You see how fast the market is taking these news here into consideration, that there will be no rate hike tomorrow. It's a good sign. 14,900 acting as a resistance, but still some buying pressure here. Let's see if we can reach the 15,000 level today in June expiration. This would be a nice level to take on some first shorts, but it wouldn't hold through the Federal Reserve meeting tomorrow, because if we won't see another rate hike, then probably there will be more buying pressure, and we could still end above the 15,000 level. So let's see this with the fin width, so we can get a larger time frame for Nasdaq. Nasdaq index on a weekly time frame, and there we see the previous high point. We already talked about this in a previous live stream. 15,200 points. There's still some room to get there. We are almost there, but 15,200 were the previous high points. So we can still go 200 points, 250 points to the upside to reach these resistance levels here. And this is what probably will happen tomorrow or maybe on Friday, before we see a downturn again. And then there will be more room for bears, because the next support level on a technical basis is sitting here at the previous high point, where we had this massive breakout. There was almost no stop here. It was a massive breakout here, sitting at 13,700 points. So therefore there's a lot of correction potential here if we fail to break above 15,200. And this was a massive rally. Therefore there's a lot of potential for a just normal correction here. Okay, back to Nasdaq. Still buying pressure. We are above the 14,900. It's still pre-market, so it's still low volume. But like normal on CPI days, we see bigger movements. This was a smaller movement for CPI day, just 50-60 points. But what we have seen here is the same like we often see. The first direction is often the false one. So at first there was a sell-off, but this was the false direction, and soon after we have seen buyers stepping in. But you see 14,900 is around psychological level, so there are some difficulties to stay above, and the bulls are selling here their positions, taking out their profits, and on lower levels they will probably step in again. Let's see this on a higher time frame, like 5 minutes. Still bullish because this candle hasn't closed yet. It will probably close near 14,900, and the same for the 15-minute time frame. So the higher the time frame, the more important it is, because more traders will trade on the higher time frames and therefore will act on the closing of these candles. So especially on the closing of the 15 or 30 or 1 hour candle, you have to watch out, because then you will see bigger moves when these candles close. But as a day trader, I would mainly focus on 5-minute and 15-minute. You can also trade the 1-minute time frame, but the problem there is you will have a lot of false breakouts, because you see on a 1-minute time frame the parabolic is changing really often here and indicating an up down trend. So there are a lot of false signals on a 1-minute time frame. Therefore I would focus on 5-minute or 15-minute time frame, because there you also have the changes here of the parabolic, but they are not so often. There are less false breakouts. Of course you need to set your stop loss a little bit more away to not getting stopped out right away, but you can also have bigger positions here when you let just the market go into your direction. So back to the almost back to the breakout level. 5-minute candle has closed. So we hit both the upper level, the upper resistance, and the lower support level. Couldn't break out in the previous 5 minutes. And now trying the next attempt. Probably on the upside. So let's move on and talk about some commodities and then go back to the stock market. So we see the same for let's start with S&P 500 first. So ES future, there we see the same like Nasdaq. It's not as bullish as Nasdaq is, but the same picture here. We have new highs on a daily time frame, 4,350 points, and June future is expiring on Friday. But if we go to ES future, we see the same here for S&P 500. So weekly time frame. And here you see we are above the previous high points, but there's more room to go back to the previous May highs we had here in 2022. So 4,600 points is the previous high point. So there are 200 points more potential to the upside to get into this resistance here. But of course we can also end early at 4,500 points. This would just be 110 points potential to the upside, because this is more of a psychological level than the 4,600. Then the commodities are really interesting right now, because with crude oil we see some weakness here in the previous days, retesting the previous low point before we had the OPEC conference on a Sunday in Vienna. And there we had the big news from Saudi Arabia that they will cut oil production by 1 million barrels per day, which brought up with a big gap up here on the previous Monday, 4.5% gap up for crude oil, but it was closed right away. Look at this, it closed perfectly this gap and closed at almost the same level it closed on Friday. And then since then we had some more selling pressure here. This is the one of the first green candles here. There was another one here on 7th of June 7th, and yeah, this is just a smaller support here, but I would wait for a retest of the previous lows, as you can see here, from March 19th and from May 4th. So $64 to $65, this should act as a bigger support level. And if I would want to go long, I would wait for this level to come, and then you can maybe look at the implied volatility to sell some short puts, or maybe even sell some short calls, because the economic data from China is not really good. So it's indicating a slowdown in economy, and this brings down crude oil despite the production cut of Saudi Arabia, because the Russians said you can do whatever you want. The Russians are in the OPEC plus, so it's a broader group of oil producing countries. But the Russians said you can do whatever you want, but we will not cut our production, because we are already selling below the market price, because we cannot sell to the Western countries. Therefore we have to sell to India and to China for a lower price, and we will not cut our production. And then Saudi Arabia said, okay, we will take on the cut on us, and to stabilize the prices or to bring up the prices. But it hasn't worked out right now. And then they even banned media from the meeting. They said some big newspapers are not allowed to report live from the meeting. I don't know what they wanted to do with this action, but it's just stupid. And they warned short sellers here and sellers of crude oil futures that they will try to do everything to bring up the prices again. But it will be difficult in an economic downturn to stabilize the prices or to bring the prices to a higher level. So there will be maybe more cuts of production to stabilize the prices. We will see on the next OPEC meetings. Okay, now to natural gas. Natural gas is also interesting. I took on a long position here in natural gas. It's just a small position for my portfolio size, but I already have some long futures here. I was a little bit early because I took on trades here on this candle, because I thought, okay, this is now the turning point. We touched the previous low point here the day before, and I said, okay, so this could be the turning point here. I entered the first position here, but then we closed at the lower level, and then the next day we made new lows and said, oh, okay, maybe I'm wrong. But then I saw this nice doji candle here, and I waited another day and I saw this next green candle here. So I said, okay, this could be the correction now to higher levels. I drew a Fibonacci from here, from the lows to the previous high points, and there you see the correction level. So we already made the 23% Fibonacci level, and I took on more long positions here. So my median price is $2.24. So it's not too bad. It's not at the low point, but it's not too bad. And you see I'm in the green right now. We are trying to get above the previous high point here, sitting at $2.38. High point from today is $2.36. And if the summer is getting hot in the US, then we will probably get into more higher price area here. Let's see, let's wait. We can still go below the previous low points, but my stop loss is sitting at the entry point, so I will not accept to go below 224 again. Then I'm out, but I'm aiming at the $2.50 area. You see here 50% Fibonacci level is sitting at $2.47, and the next Fibonacci level at 61% is at $2.55. And you see there were some major levels where the prices were struggling to get back above. So this could be an important area between 247 and 255, and in this area I want to sell my long position and wait for a rejection there, and for lower levels maybe back at the $2.40 area to get back into a long position, because I still believe that we can see the $2.80 or $3 level back. Just be patient and wait. So I'm in a long position. Like always, don't trade after me, make your own decisions, but I'm here in a long position for natural gas. Also interesting is orange juice. Orange juice made this big push to the upside here with 24%, then pushed above the previous high points, then corrected in a move of 14%, or yeah, almost 14%, and then we saw this nice doji here. So I said, okay, maybe this is the sign for a change of direction and to go back to the previous high points or even higher. Because if we look here at, oh no, I will use this one, orange juice. If we look at the commercials, we see we are at all-time highs, or we were at all-time highs, and we see the commercials still have short positions, but then they are not really shorting heavy into the market. Look at this. They had big short positions, but the more the price rose, the more they left their short positions. So they are still short, but with a lower short position than they had at the beginning of the year when the prices were lower. This is never a good sign, because normally commercial traders, so all the ones who have the orange trees, they normally short against the market. So they are contrarians. When the price is high, they want to sell their product. They want to sell orange juice. When the price is low, they don't want to sell because the price is maybe too low. So they are waiting. And this is what we see here. When the prices are low, then they have almost no short positions and can also have long positions. And when the price is high, then they short heavy the market. But what we have seen here is, while the price was rising, the short position was lowering. This is interesting because normally we don't see this because of the contrarian position of commercials. And because of this, I believe that we can still see higher levels. Maybe the 300 cents level, maybe even higher. So I would wait for a clear sign of a reversal here before taking on a short position. And therefore I took on a long position in orange juice. I have a stop loss placed below the previous low point here, so I don't want to be in this position when we go to lower levels here. But I believe that we can see a 50% or maybe a 68% reversal here back to the 280 cents level for the July future. So let's see what happens here. So my potential from the entry is minimum 6%, maybe even 8% to the upside. This is the level I'm aiming at because this was a previous high point, as you can see, 280 cents for July future. It's not the most liquid future, even if orange juice is a liquid. The future is not really liquid, but you can still trade it. But be cautious when you try to trade orange juice, because you see the liquidity is pretty low compared to crude oil or natural gas. Then another interesting commodity is cocoa. Why? Because you see we had a big rise since March. So the cocoa prices are up more than 20%. And if you look in previous years here for cocoa, you see that we are back at the levels from 2016. So we haven't been at so high prices since 2016. So it's a pretty high level, and you see the big rise since the end of 2022. So it went from 2,300 to 3,180 cents. So this is a big rise here in price. So probably chocolate will be more expensive in the next days and weeks. But what can we trade here? Because here we see now the opposite. Prices are rising, and what are the commercials doing? The green line is going to lower levels. So they are opening short positions. And we see that they have big and heavy short positions like they had here the previous time in 2020 and in 2014. Of course, it's never a timing tool. But here we see in 2014 they shorted really heavy, and the prices even went higher, but then they were right because the price was then dropping. Back here in 2020 they shorted. What did the price? The price was dropping. So if we see an extreme position of the commercials like we see right now, then we are pretty near of the highest point, and it can be interesting to short. To short against the trend. It is always risky, but the more we see signs of a reversal with a big short position of the commercials, it can be interesting to short. The more interesting for me as an option trader is that we have a low implied volatility. Look at the implied volatility of cocoa. We see a really low implied volatility. Even if the prices are rising, implied volatility is almost at the bottom. Just 20% implied volatility for cocoa. It's pretty low. So what can I do? If I don't have anything in mind of rising prices or dropping prices, I can buy a call and I can buy a put. So this is considered to be a long strangle. Yeah? I want to be in a position where I can profit from both, from rising prices and from dropping prices. So I'm buying both. Buying a call, buying a put. Buying a call with a strike above the current price level, buying a put with a strike below the current price level. As soon as we get to the previous high points here, you see it, 3,380, maybe 3,400 cents, this could be maybe a bigger rejection point, and therefore I would sell my calls here and just hold on the long puts. And even buy more long puts, because they are still cheap right now because of the low implied volatility. And then you could profit from both, from a rise of the prices and from a drop of the prices. So you would be in both positions. And if we would turn early, if we won't get back to 3,400 cents, then you can also profit from a big drop with the long puts. Even if your calls will expire worthless, you will maybe make more money with the long puts. So this is what I would trade right now, not the futures, but a long position in the calls and the puts as a long strangle. For sugar, it's not really interesting. Still in a sideways trading range here. It had difficulties to close below the 25 level, and then we closed finally lower but went back above. Still below the parabolic, but above the moving averages. So it's just on my watch list. No position here for sugar future right now. Back to the stocks and then to the index with some bigger technology stocks like PayPal. So PayPal had lows here of about $59 in May and went to higher levels. But we are still struggling here, even if the technology stocks are pretty good in rising at the moment, as we have seen with Nasdaq. PayPal is struggling. As you see here, we are below the previous low points of $65. So it's still a weak stock. So I wouldn't go into a long position when I'm waiting for the market to make a downturn. The implied volatility is low, so you could do the same strategy as with cocoa. You could buy a call, you could buy a put. It is cheap compared to the previous time here. And you could profit from both. if the prices are rising or if the prices are dropping. We just need a big movement, because if it's going sideways like it went the previous 2 months, then you will lose money because time is not in your favor. But let's see some other stocks like Tesla and Nvidia. So for Tesla, we see big strengths. Look at this. From previous April, we had a rise here of 67%, and implied volatility is already rising. So more traders want to be secured now. They are buying puts because the stock can turn, and they don't want to give up their wins. So therefore they are looking for safety. They are buying puts, and this drives implied volatility to higher levels. If we go on a weekly time frame, we see that we clearly went above the previous high points. This was a massive breakout here, and even went above the previous high points from October 2022, sitting at $237. So what is the next level? You still see my level here where we had this previous sideways range. So this should act as a resistance. Previous high point here, previous low point here, $265 should act as a resistance, because there you can see on a weekly time frame we had 2 times this level at the bottom, and then the 3rd time on the next week we had a big sell-off. So therefore this should act as a clear resistance. Of course we can go into this zone here if the market is still strong, but because I believe in a market downturn, I wouldn't trade more longs here above $265, rather looking for an entry into shorts. Not shorting the stock, it's really dangerous to short against this strong uptrend, but buying some puts. I did this 4 weeks ago already, but I was too early and the stock rose more, but I lost only a small amount, because you can never lose more than the premium you paid for your long puts. So I would do the same. Implied volatility is still low compared to previous December and January. As you can see, where there was this big drop, we had a high implied volatility. So when the stock is dropping, we can see more implied volatility, and with a long put you will profit from both higher implied volatility and lower prices of the stock. For Nvidia, it's also really interesting. Where is my chart? Here. Nvidia is in a sideways range right now. We had this massive push on the earnings, made new highs here at $419.38, and since then we are just trading sideways. So I closed out 4 days ago. I closed out some shorts. I shorted at 400, closed out at $376. So this was a good decision, because now we are back at a $400 level, but it's just a sideways trading range, and it's not a strong and not a weak stock. Nvidia is just going sideways in the previous trading days, and it was one of the strongest stocks of the tech sector since the beginning of this year. Therefore it's just normal that it's making a little bit slower pace right now. But yeah, it's probably moving with the market, and therefore when the market is going to higher levels, Nvidia will also try to do the breakout here at the previous high points. So not shorting right now, but if we go below the previous low points, then maybe there's more potential for lower levels. The same here, like with cocoa, low implied volatility, so it is cheap to buy some calls or puts, and you could do the same strategy, buy some calls, buy some puts, and you just need a big movement to the up or downside to profit here with Nvidia. Then last, let's go to VIX, our implied volatility index. So we had lows previous week at 13.5, and you see this is a pretty low level. We had this big doji here when we hit the 20.8 level, and then there was a massive sell-off in VIX, because a lot of people were preparing for all the events by buying calls, but because there were no bear news, the VIX dropped to low levels. If we go on a monthly time frame, then you see that this 14 or 13 is just the normal level. Before COVID, we had just 13 and 14 all the time. It was just our mean level. But now it's a pretty low level, because the last time we have been there is 2021, and all the other time we have been at higher levels, even above 30. So what did I do? I prepared for all the events. I bought into some calls with a ratio call spread so a call back spread, and I try to profit from a downturn, maybe in the next weeks after the big expiration on Friday, to profit from higher implied volatility. The more people are preparing for a drop in the stock market, the more I can profit with a long call here, and it's not at a big cost, so it's an easy position here to profit from more fear in the stock market. Okay, finally go to Euro US dollar. There we see we had this big drop of 4% from US dollar. So US dollar was getting stronger, Euro was weaker. Then we had the sideways trading phase, and we are now trying to break out from this sideways trading to see a correction, maybe a 50% correction back to the 108.6 level here. We often see this before the Federal Reserve meeting, a strength in the euro and a weakness in the US dollar. We really often see this just a couple of days before the meeting. So I wouldn't wonder if we would touch tomorrow the 108.6 if there's no, especially if there is no interest rate hike. So this could weaken the US dollar even more and strengthen the euro. So therefore this is my target here to short euro US dollar 108.6. I would wait for this level. You see that we had some days trading around this range here in May. I would wait for this level and then see if I can enter a short, because when the market is dropping, probably we will see euro US dollar as an early indicator for more potential to the downside in the stock market, and therefore looking for entries at or around 108.60. Okay, I think we have gone through all major. We have missed gold. So let's talk about gold. It's not really interesting, just sideways trading, but you can see that we went below the sideways trading phase here, and then touched again, couldn't manage to go into, then touched again rejected. So we are in a new sideways trading here below the previous sideways trading, and we are now waiting for a breakout on the up or downside. And if I would guess, I would say we will soon see a break below the 1930 level. When the stock market is dropping, when the US dollar is getting stronger, then we will probably see more downside potential for gold here. But for now, it's not really interesting to trade as a swing trader within this sideways trading range. Okay, let's close with Nasdaq here. 15,090 points for September future, and let's see, June future is finally above 14,900 points, settled there. So let's see if we can go to 15,000 points today before the Federal Reserve meeting when the market is open. And like always, be cautious whatever you trade. Hope you will have some nice profits today, and you could get some nice insight from my live stream. I will try to live stream tomorrow. I don't know if I will do it already pre-market for PPI news, but of course I will try to live stream in the evening for the interest rate decision. So let's be prepared for this. And like always, please subscribe to my channel and give a thumbs up for my stream. Thank you for watching. See you next time. Goodbye.